Hi, Linda Urbick with RealtyOne Group. And in today's episode, we're going to be talking about jumbo mortgages. And my guest today is Michele Paxton with Guild Mortgage, and she's going to really get in depth about what they are and the requirements for a jumbo mortgage. So Michele, welcome.
Thank you, Linda. How are you?
Good.
Yes, my name is Michele Paxton. I'm a loan officer with Guild Mortgage. I've been in lending for about 20 years. Guild Mortgage does have the gamut of loan programs. We are a direct lender, and we have all kinds of mortgages. That's what we do. We're not a bank. That's the other type of institution. And they have a focus of all kinds of financial products, and all we do is mortgages. But today we're going to focus specifically on jumbo.
Okay, so Michele, what exactly is a jumbo mortgage?
Well, as of January 1st of 2020, it is any loan amount over $765,600.
Okay, so it's over $765,000.
Correct.
Okay. Are there different rates for the jumbos versus other loan programs?
You know, kind of a funny thing. Typically, a jumbo interest rate is going to be roughly quarter or a half higher than a conventional or conforming. But right now, the high balance and the jumbo rates are lower or the same as the conforming and the conventional, which is actually a really good thing for the Bay Area residences.
And these are fixed rates?
Everything. There's 30-year fixed. There's the 3-1 arm, 5-1 arm, 7-1 arm, 10-1 arm, pardon me, and 30-year fixed. We can broker out. There is a 40-year fixed, but it's not standard or typical amongst jumbos.
So I've got a question about your adjustable rate mortgages. You know, we think everybody understands what that is, but they don't. Because you were just talking about a 3-1 or a 5. What does that really mean?
So 3-1 arm, 5-1, 7-1 means it's fixed for that amount of time, and then it becomes adjustable. Typically, once a year thereafter. So after those 3 years are over, then it can become adjustable once a year. One time when that 3 year is up, and then once a year. They are tied to a margin and an index. So actually, part of that adjustable rate mortgage is not fully adjustable, only half of it. It's the margin is fixed, and then it's the index that it's tied to that actually adjusts, that people get concerned about, but they're very stable.
Do you see more adjustable mortgages in the jumbo range?
Yes, actually you do. Especially in the Bay Area, you've got people that are in the high-tech industry. They move around, they move up, they have their first home, they go into a bigger home, and then eventually they're going to get into a smaller home or move or do something with that mortgage.
Okay, the next big question, credit scores. What's the minimum on a jumbo?
680 on average. I'm sure somewhere out there we might be able to go down to 660, but 680 and higher is pretty standard.
How about our down payments?
5%. That's it. 5%. All the way up to $1 million. We do go all the way up to $3 million in loan amount, but the minimum down is 5.
So people in that range now don't have to put a 20% mortgage down?
No, absolutely not. There's so much out there, and it's going to depend on each individual. But you can put as little down as 5%. Average is 10 or 15%. Obviously, the more you put down, the lower the loan amount, the slightly lower the interest rate. There is PMI that will be built into the loan. But again, there's a couple different options. We have some products where there is no MI, and then some with MI.
That was my next question, because I think I read somewhere where you could put less than 20% down and still not have to worry about PMI.
Correct. Yes. On that particular program, it's 10% down, no MI, and actually the rate's really not that bad. It's a really good option. And what I do is I make sure I provide all the different options and tell you the short and long-term benefits. And that's what's really important about what we do, is listening to people's short and long-term goals to see which is going to be the best fit for them.
Great. Okay, now I know you kind of mentioned that, but is there a maximum loan amount that you can go to on the jumps? Did you say $3 million?
Yes. So $3 million is the most. Guidelines do change after the first million. But we do go all the way up to $3 million.
Oh, that's great. Okay, so one other question: interest-only loans, are they back?
Oh yes, they are. They're back. A lot of things are coming back. Things similar to the stated but not stated programs, and a lot of things have come back. And we do have interest only, yes, on all of those programs. Actually, not the 3-1 ARM, but the 5, 7, 10-1 ARM, and the 30-year fixed all have an interest only option. The interest rate might be a little bit higher, but your bottom line, your payment will be lower.
So on a 30-year mortgage, if you have an interest-only loan, when do you start paying principal?
So the first 10, it's an option on your statement. So you'll have an interest-only option.
Okay.
Yeah. And so the 5, 7, 10, 1 ARM will actually be interest-only for that term, the 10 years. And then, and then you do have to bite into the principal.
Okay,
And
great.
it is an option.
Anything else you'd like to add to this?
The interest only, not the interest only.
Anything about the jumbo loans that we might not have covered?
I'm trying to think of anything off the top of my head. No.
Okay.
I don't think
Well,
so.
thanks for joining me today.
Thank you.
I know, just as an added bonus, you've talked about a possibly 100% loan out there soon.
Absolutely, yes.
So we'll get into that in our next. Is it out now or is it coming?
It is out January 1st. We've got a couple new 100% financing programs, which is fantastic, more competitive for first-time buyers, especially here in the Bay Area.
Well, that's a reason to tune back into us so that you can hear about the 100% of mortgages. Thanks so much for watching, and I'll see you next time.
Thank you. Have a great day.